In today's episode, I'm excited I'll be talking with Crystal Misenheimer. Crystal's a leading expert in chiropractic practice succession and transition plans. As lead broker at Progressive Practice Sales, Crystal brings a wealth of experience in practice sale norms and risk mitigation, practice evaluations and business analysis, and a thorough understanding of marketplace trends. A former clinic owner herself, she's uniquely qualified to provide comprehensive support on the many complexities of clinic valuations and practice sales. Welcome, Crystal.
Hey, thanks so much for having me.
Awesome. Heath, let's just get started by you sharing like the bullet pointed version of your story and why you do what you do.
Yeah, absolutely. So, as you mentioned, I am a former clinic owner. My husband was a chiropractor. I managed our offices. We had 3 of them, and we sold them in 3 different transactions, kind of moving around the country, having fun, being young and free. And every transaction was really challenging. Everyone had messes afterwards that we were left to clean up. We always used professionals to help us, and it never felt like enough help. So after the 3rd time, with each one being a different mess afterwards, we just thought, gosh, somebody has got to come in and do a better job for these doctors who never wanted to be business brokers. They just want to be healers and take care of patients. And they have these really important business transactions that they need to conduct with a lot of help. So we decided to build the brokerage that was uniquely fitted to the needs of chiropractors and a chiropractic practice sale. So everything that we've done has been specifically to serve the chiropractic community. And that's how we got here today, 10 years later.
That's awesome. And what would you say that you all do differently or that makes you unique compared to maybe others in the same space?
Yeah, so the size of transaction for a chiropractic practice is typically going to be, it's a pretty big range. It might be anywhere from $15,000 sale price all the way up into the $2 to $3 million sale price range. Certainly there are some bigger than that, and there actually are some smaller as well, but that's kind of the general range, and that's called a Main Street business sale. So most business brokers that conduct Main Street business sales, they're going to invest somewhere in the neighborhood of about 30 hours in that transaction. And the model that we've put together, we put in an average of 200 to 300 hours in the sale. So it's just a dramatically different experience, a dramatically different level of effort and support. And the primary way that we're able to do that is we have a team of people who are serving our doctors. So instead of it being one broker who's kind of doing everything for all people, we have many different people who specialize in different parts of the sale. And that's what allows us to really invest and, provide expertise in all of these areas.
Wow, that's great. What do you find most exciting about practice sales and working with chiropractors?
I love working with chiropractors. I love that chiropractors serve their communities and that we get to come in and help them at the beginning of their career and the end of their career, and sometimes in the middle, make these transitions. So it feels like a really nice way to serve people who are serving. But I also love how interesting the work is. Every clinic is different. That's not going to surprise any chiropractor. They're run very, very differently. So it's always interesting to understand the practices and be able to help other people to understand them.
That's interesting. What would you say are some common challenges that your clients face?
Well, I think the biggest challenge is that chiropractors really don't know what they're getting into with these transactions. And I know we didn't the first time that we sold one of our practices. It seems pretty straightforward. You have this practice, you take care of patients, it's got some tax returns. What else is there to really say about it? But the truth is that business sales are sold based on trust. And so you can't really just give someone a stack of papers with some numbers on it and hope that they can understand that business enough to see hundreds and thousands of dollars of value in it. So you have to put together a pretty comprehensive information package to help the people who are evaluating your practice to understand it and see the value. And that starts with the buyers, but it extends into their CPAs and their attorneys and the lenders. And nobody is prepared for what that process looks like and what it involves. And then that also supports the practice value, and how the practices are valued is also something that's completely foreign to these doctors. So it's hard because it's one of those situations where you think you know what's going on because you're thinking common sense, dictates it should be like this, but in reality, it's just a completely different process. So there's a lot of expectations that people have that just won't pan out.
I bet. I bet. So I imagine you're having to manage expectations quite a bit in that valuation process.
Yeah, definitely.
Awesome. So if there was a doc who is like looking to move, let's say out of state, not nearby, what would you say to them if they were weighing whether to sell the practice or maybe have an associate in the practice while the doc manages it remotely?
Yeah, it's a decision that a lot of doctors face, and I think that there's a lot of factors that they need to weigh in. So the first thing that you have to think about is the practice model that you've put together. How easy will it be for another doctor to step in and do what you've been doing? And that's not just providing the patient care, but it's also signing up new patients, doing those exams, converting them into financial packages if you do prepaids or continual payment of the per visit payments. So there's just a lot that goes into the practice operations that's not just the patient care. So how easy are the systems that you've set up there for someone else to do? Then how much do you enjoy managing employees? Because you're going to become a business manager instead of a business operator. And if you don't really enjoy the business management side of things, then you're likely to run into problems. And those problems will grow exponentially because of the fact that you're going to be managing it from a distance. So you can't sit down with that employee and have a conversation with them and give them some feedback. You're going to be doing it over the phone or email or Zoom. And that's going to be more challenging for you to feel like you're getting the right connection to see improvement. And, ultimately, sometimes if you have to give a lot of feedback, you may lose that associate doctor. And then what does it look like for you to come and step back in? So for a lot of chiropractors who just they really want to be a healer and they're sort of a business owner almost by accident, having an absentee run practice is a lot more challenging than they expect it to be.
I would have to imagine. It might seem pretty easy on paper, right? But in practice, it's quite a different story.
I mean, unfortunately, we've had a lot of doctors who have tried to do this. And what we've seen, is 75% of the time, what happens is the practice just starts to go down in volume. There's just some attrition that steps in because the associate's not maintaining the patients in the same way. They're not signing up new patients. And as the practice numbers go down, the value goes down. And over the course of 12 months, 18 months, 2 years, a practice that's having that happen, it can lose hundreds of thousands of dollars in value. It can go down to 25% of what it once was. And once a practice loses value in a way that it's on the books, you've got a tax return that is at those lower numbers, it really takes about 3 years of rebuilding to get the value back to where it was.
So it might seem like, oh, that's a great profit maximizing thing to do, right? Like have the business run and have someone step in and maybe you'll sell it later to them or someone else. But it can actually take you backwards.
Yeah, and I think there's some great consultants that do a really good job of teaching doctors how to have associate run practices. And so for the doctor who's willing to invest the time and probably the resources in learning how to operate their practice that way and build it, and then be in that practice with that associate, make sure that everything is really set and stable for a very long time, I would say a year before you ever leave the practice, then you probably have something really nice there. But to just put a doctor in a practice and then assume that the practice will continue to go on as if the owner were there, that's just not the thing that just happens organically.
Well, and you just said something about like a good year or so in advance. It makes me think it's not so easy to sell a practice and make sure everything's like really buttoned up well. Do you find that an opportunity to perhaps be better prepared, or are there things that maybe docs could do before they're ready to sell their practice?
Yeah, absolutely. For anyone who's starting to think, retirement's starting to call to them or their shoulders starting to hurt, what you want to do is you want to start preparing as soon as those thoughts enter your mind. Because what we found is that from the first time that doctors talk to us until the time that they are actually ready to start a sale, it averages about 3 years. It's a huge decision, the big life transition. So it makes sense that it'll take a while. So you certainly don't want to wait until the very last moment to start thinking about it. And in those 3 years, you could do so much to prepare your practice to get better value because you're going to need 3 years of tax returns and financial statements to support your practice value. So, if in those 3 years you're being intentional about how you're running your practice, you can actually boost the value and the saleability and then have a much easier sales cycle when it's finally time to get started.
Nice. Are there maybe any big things that come to mind that a doc could do to build value in their practice, like you just mentioned?
Well, it's a very tricky conversation. There's a lot of what ifs and possibilities in that conversation. But the general thing that's going to build practice value the most is profit. And that is profit that's transferable to a new owner. And there's a lot of profit that's not transferable to a new owner. So, for example, if you own the building and you don't pay yourself rent, well, you're probably going to charge the new owner rent. And so by having maybe a more expensive building that commands a more expensive market rent, you're actually dropping the profit down of the practice, which lowers the value. We've also seen some people that have invested time and resources and effort into building parts of their practice that just don't transfer well to a new owner. So for example, someone who does a lot of IME exams, a lot of people aren't going to be qualified to take that on. And so that's not really revenue that's going to transfer to the new owner. So if you're really focusing on building that side of your practice up, the other part of your practice might kind of go down to make room for more of these exams. Well, you're actually bringing the practice value down. So there's a lot of things that go into determining what's actually going to raise the profit in a way that's transferable for someone else, especially when, you have to think about it in terms of who's the right type of buyer for your practice, what's the timeline that you're probably going to sell within. All of those things factor into a plan to really optimize the transferable profit.
That makes sense. And obviously, profit's probably one of the key factors. Is there any sort of correlation between, let's just say, maybe practice growth and maybe beyond just the profitability factor?
So practice growth is generally really good. You have to be careful though, because as any business owner will tell you, it's definitely possible to invest in your practice or in any business and grow it while also decreasing your profit margin. And that's actually pretty common when you have rapid growth, is that it's hard to keep the profit margin stable because you also have to invest in a lot of support staff or additional services just to keep operations going. It takes a while to find that, sweet spot where you've gotten your systems caught up to that growth. So growth in the practice doesn't necessarily translate to profit. But then there's also a situation where you might grow the practice, you really, really invest in it, invest your time and blood, sweat, and tears and all of that, and you boost the growth and you boost the profit. But then you're just completely worn out and you just can't keep doing that. Well, the valuation is going to be based on the last 3 years. So to get the most value out of that, you've got to keep it up for 3 years. If you get 1 year of growth out of it, and then you just, oh gosh, I got to take all these vacations. I just can't do it anymore. I'm going to drop down to part-time hours. Well, now you've actually hurt your practice value because now your current numbers are lower than where you started. So it's got to be profit that transfers and that provides some stability so that the numbers that you're selling at are still capturing that growth.
So obviously I'm getting a sense of there's a lot of moving parts that really affect the sellability of the practice.
Definitely. It's a puzzle for sure.
So what would you say are some actionable maybe insights or tips that you could share with our chiropractic community who I guess may not even know what they don't know about either buying or selling a practice?
Yeah. So on the selling side, I think one of the most important things for the sellers to think about is, again, a business sale is built on trust. And it's really hard to be the business seller and to, be just completely transparent about the practice and what you're selling. But we work with buyers all the time who are trying to purchase a practice that we're not representing, and the seller is hesitant to provide the tax returns or doesn't feel comfortable having them come in and look in the patient files and whatnot. And it makes sense because they don't want to give away any trade secrets. They want to protect their confidentiality. It feels exposed to have that kind of information out there, but they can't buy the practice if they don't understand it. And so they've got to be able to see this stuff. And the fine line is what's a reasonable request and what's not. And you really do need professional support to navigate that, to know what is normal in a process versus what is an outsized request. But being very transparent, being an open book, making sure that what you're giving a buyer isn't creating more questions than it's answering. Those are really the very boring keys to success in this process.
Makes sense.
Yeah.
And how do you see things progressing, like in the near future for chiropractors, either looking to buy or sell a practice?
Well, it's an interesting time in a lot of ways. I think that there certainly is something to be said about the economy, and there's a lot of kind of guesses about what's going to happen with interest rates, and are we going into a recession? Are we not? Historically, practice sales, business sales in general have stayed very strong during recessions. It's a time when a lot of people look for stability. So if you have a practice that is very stable, then a recession doesn't necessarily impact your practice sale. But for a practice that historically has not done well in recessions, that would be a concern that I would have if I was a practice owner in one of those areas. The other big thing to think about when you're thinking about buying or selling a practice is the financing markets and how open are those. We had really high interest the last couple of years, and that hasn't slowed down practice sales in any meaningful way, especially amongst owner operators. The investors have really stepped back, but owner operators have continued to purchase at about the same rate. And we are expecting interest rates to start dropping. So that lends itself well to people who are thinking about this process. And then if you think a little bit like on a little longer term horizon, there's just a lot of interesting things happening in terms of corporate ownership in chiropractic. There's a lot of private equity and venture capital interest that is looking at chiropractic and saying, hey, this could be the next dental. And if anybody noticed what happened in dental over the last decade, basically every independently owned dental practice got bought up by these chains and their private equity investors. And they created these chains of practices, really beautifully branded. And now those dentists that used to own practices now all work in these practices and have share of ownership in these groups. And that is more than likely what's coming for chiropractic. It's hard to escape private equity once they've decided that that's an area they want to consolidate in. And it's going to be a great opportunity for a lot of doctors to be able to sell at a higher value if they're open to the unique structure that is selling to an investor. It'll be interesting to see how that plays out because that will change chiropractic significantly since it's always been independently owned and operated with just a few exceptions. But we have so many investors that reach out to us on a regular basis. We're getting contacted by new investors. So it's certainly something where I really think that the consensus is they're just waiting for the cost of capital to go down. And then at that point, they'll kind of go back to where they were in 2019, 2020, which was actively acquiring these practices.
That's interesting. Is there anything unique to working with investors specifically that you might be able to share a little bit about?
Yeah, it's a completely different conversation than selling to a chiropractor. And that's the thing that doctors really have to understand because there's some general knowledge, I think, in the chiropractic space that there are these investors and they're going sometimes to practices directly and saying, hey, we'd be interested in buying your practice. They'll throw out multiples, which is how businesses are valued. They're valued on multiples of profit. And typically investor multiples are higher than when an owner operator was going to buy the practice. And so that can be very appealing. But once you get into the conversation, it's just a completely different sales structure. Typically, the seller is going to still be a partial owner of the practice. They're going to work in the practice. It's going to take them a while to get the full sale proceed. They're typically going to be working to grow the practice after the sale versus stepping back into retirement. So it's just a very different model than selling to a chiropractor who's going to come in and take over your patients. And I think that that's something that most people aren't really aware of until they enter into that conversation.
It sounds like a much longer exit strategy.
Definitely much longer and also more complicated because these investors, they're just not chiropractors. I mean, they all have MBAs, they speak a completely different language. The process that they use to buy these practices is completely different. How they look at the value is different. And so it can be pretty overwhelming for a chiropractor who feels like they've got their head wrapped around selling to maybe an associate or understands kind of the generalities of it to walk into this conversation and have it just be so dramatically different in pretty much every way.
I can only imagine.
Yeah. It involves flow charts. Let's just say that they all have to have a flow chart just to explain to you how the money is going to flow from all of the different entities that are involved.
It sounds a little bit different where it sounds like it's very, I guess, financially driven. I mean, I guess that's the nature of investing, right? It's all really about the financial aspect of it. And my experience has been docs get into this for a much different reason.
When you think about the transition in a sale like that, it can be really challenging for the doctor because it's one thing to transition the practice to another chiropractor who you can introduce and you can say, hey, this is Dr. Smith. I talked to a lot of doctors before I decided on Dr. Smith. He's the one who is going to be the right choice to take over your patient care. I'm confident in what Dr. Smith can do versus I've sold the practice to XYZ Corporation and we have this doctor who's an employee of XYZ Corporation who's going to be stepping in and providing your patient care. In some cases, it will still be the selling doctor who's working in the practice providing the patient care. So that can make that a little bit easier, but it still is likely that there will be a lot of changes to how the practice is operated. And so there's the thing that's important, I think, is nothing is all good or all bad. There's going to be challenges and positives to all of these different models. And so the key for doctors who are thinking about retirement is you just need to understand what the process looks like and what your options are. And once you can understand all the different options, in my experience, there's usually one that really sticks out to the selling doctor as that is definitely the natural fit for what I want, for what my practice is, for what I want for my staff and my patients. And then it becomes easy to create a plan based on where the practice is at and where you're trying to get to.
Sounds like something where it's helpful to have someone to guide you along that decision-making process.
It really is. And it's easy to think of a business broker as sort of like a real estate agent who helps someone to find a house. And then you've kind of got just this process that you go through that feels fairly simple. But the truth is that a broker, finding a buyer is just a small part of that process. The real process is the strategy and making sure all of the details are managed and making sure that everything's set up for success, both with closing the transaction and obtaining the funding. And that's why it takes 200 to 300 hours because there's a lot that goes into all of that.
Yeah, like 200, 300 hours. I can imagine trying to do that myself.
Yes. Yeah.
Awesome. Well, before we sign off, do you have any final advice that you'd like to share with the chiropractic community? Anything we might have missed? And also please tell the listeners the best way to connect with you.
Well, I mean, what I would say is that definitely visit our website, which is progressivepracticesales.com. There's a lot of content on there. We do a lot of collaborations with different industry partners. So if you want to learn more about buying a practice, selling a practice, financing a practice, there's just tons of information on there. And then there's also on there links to schedule a complimentary consultation. We're very big on educating the community. So that's a great way to reach out to us. We also have a web chat, phone number, all the things on there. So I would say website is probably the best. We do have people that also monitor and keep active our Instagram and LinkedIn and Facebook as well. But then, just as far as parting words of advice, I think that it's just really important for every chiropractor to just have a good general understanding of how practices are valued and how practices are bought and sold, because more than likely, most chiropractors are going to eventually be part of that process at least once, if not twice. And so it's important for just the continuity of your career to understand these processes. That way, if an opportunity arises, you're not starting, from ground zero.
Right. And like you said, not at the last minute. Years, like couple, 2-3 years in advance.
You will thank yourself. Future you will thank you for planning in advance, for sure.
Awesome. Well, thank you so much for sharing your insights with us today, Crystal. We'll make sure to link to your website in the show notes in case anyone wants to take a closer look at that, reach out to you, learn more, and the other things we covered today, and by going to growyourchiropractic.com/podcast. Thanks again, Crystal. Pleasure having you on.
Yeah, it's been fun. Thanks for having me.